Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, March 2nd, 2023. Again, markets are definitely following through on my current analysis. And today, both the S&P and the NASDAQ dropped down to that 1.382 support level for an irregular B wave within the context of a minor wave 2 counter trend rally. So within that counter trend rally, the B wave was counter trend to the counter trend. So it became a very interesting move. It got a little bit shaky in terms of, I really didn't want to see it drop further than here in the S&P than it did at 39.25, although I was allowing for a move down a little bit lower. I found additional support around 39.17 down to 15. It didn't get there. It didn't necessarily launch right off at 39.25. That didn't come until quite a bit later in the day. In fact, we didn't really see it kick in until about 10, and then again it kicked in at 1 o'clock. So, and then it just took off, and then it went. Now, a little bit of background on what I had discussed last night, saying that if those levels hold, and we do get that irregular B wave, then what that C wave needed to do was to go and just go without looking back. It started like it could, but then it pulled back. And then when it did finally get going, it didn't look back. But it took actually until that 1 o'clock hour. And what happened within that hour was we started to get news about interest rates. And they just started to go after it because of they chose today a particular governor that actually was in favor of only a 25 basis point hike. Well, you put that out there and every algorithm in the world is going to grab that and buy, because that's how they're programmed. They're programmed to interpret the news, and I'm sure that it has a catalog of words that would trigger one direction or the other. Now, I also had then gone in, and I just want to show you some of how I intraday can determine where I think they're going to end up. Again, we've done a lot of discussions, at least in the trade room, on the 0 days to expiration or 0 DTE options. So I know I've spoken to you all about how we have options that expire every day, Monday through Friday, in the S&P, so the SPX and the cash, in the ES, the future, in the NDX, in the NQ, and there are many other asset classes that also have expirations every day. That has actually changed the canvas of how the markets trade, what causes these sudden declines and uptrends against a backdrop of extremely negative news. Now, let me just tell you that backdrop today. That backdrop was that the bond market, so the treasuries, were going south. They were going lower, 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 lower. In fact, the 30-year was down well over a point. In fact, they all broke support levels, which would suggest that they were heading back towards the October lows. But that didn't happen. They stopped. They started to even out. We got that news. The markets blasted higher. So, but they still ended down significantly on the day. All the treasuries significantly lower on the day. But the equity markets chose to ignore any news, and they totally became algorithmic, quantitative, and the numbers. It was all about the numbers. And then we saw volatility, again, within a declining market. The only one that managed to stay up for pretty much the entire day was the Dow. And that's because of Salesforce. But the others were down significantly. I mean, we take a look. The S&P, The low was 39.25. The high was 39.95. That's a 70-point day, and it basically was a 70-point swing higher for the S&P. The NASDAQ was even greater. The NASDAQ was over 200 points swing, high to low. So these are very volatile moves, and yet the volatility barely ticked up. So we have a lot going on, and again, it's all derivatively related. So it's about the derivatives. The volatility options, they expire on Wednesday. So we had an expiration yesterday. Coming in today, new day, new time. Let's crush the vol. And they did. And it's amazing because it forces a lot of other adjusting across the board. So I had put out midday, actually more towards the close, that I had felt, and actually the S&P was trading at that time about 39.65, but I could just see where they were lining up in terms I was watching volumes to see that they were lining up between 39.80 and 39.95. 39.95, 3,995 it traded. Coming in, 417 was the open interest. That's a pretty big buildup. Got close. That was the high. And then they sold it back down. And I felt that they could get up between 39.85 and 39.95. Where did they close it? This actually came in, but the close itself was 39.86. So sold off a little bit after hour. So you get 1 hour, extra hour. And so what I do is tomorrow, these are what expires tomorrow. Starting the day, what do you got? 4,000. Funny how that number keeps coming up. Okay, so if we already think that's like, well, that's what seemed to be where they're kind of going to try to rally. The open interest coming in today was just under 2,500. Now we have 9,358 trading today. How's it going to change that number? How's it going to affect how we trade tomorrow? Where do we think the market's going to go? Where can it expire? Now, let's go back to our chart and realize that what we had, an A, I did put in that labeling, the C wave done, the B wave, now we're heading higher in a minute C wave, and boy, did it not take off, and came within 5 points of getting back to 4,000, all within, actually, there was this hour, all within the last 2 hours. It's amazing to watch because it's nonstop. Money pouring in, buying. Now, granted, today was also second day of a new month, 401k money being placed into the ETFs, being placed into asset management, being placed to be placed within the market. Now, again, you start to wonder, it's like, how much money do these people have that they want to place in the market in its current environment of rising interest rates and inflation? Well, you're getting your answers. So again, the narrative, you're in it for the long haul. You're putting money, you're investing money. The stock market should pay more than what interest rates are paying right now. It's going to be a hard push, but it's a hard job to be an asset manager and try to think you're going to have to provide greater than 5%, 6%, 7% if interest rates go there to your clients via this ETF. That's a return when interest rates are already going to be paying 5%, and they're over 5% now on very short-term paper, very short-term T-bills. Okay, back to the count. So this was 1.382. So in a regular B wave, when you're going to start going below, in this case, it went below the current low to form the B wave, still coming in an ABC. So it followed through on all of that and then launched. That's what we look for. That normal retracement level. So the normal Fibonacci, 1.236 to 1.382 if it's in a regular B. Then once it takes off, what's the equivalent? Because again, the C wave has to be related to the A wave. So here we run our extensions down to the bottom of that C wave from the start of the A wave. Now we get it. 100% just takes us to 4,002, which just happens to be right where that 200 EMA and SMA are sitting together at 4,003. That's going to be resistance, but I'm feeling that they will push right above it. Why? Well, because we're looking for 1.382 to 1.618. Well, keep those in mind. The first one, 1.236, 4,020. That just kind of takes us right back and just under where we need to be. I still would be looking for minute wave C to take out the high of minute A, and that's 40.24. Look what comes in at 1.382, 4,032. And 618 is just 4,050. Now, did we believe that when the market was trading down close to 39.25 that they would mount a 70-point rally in the S&P in the current environment in terms of interest rates and what's happening across the board? And the dollar was higher, et cetera, et cetera. Yes, it was possible, and it did happen. So can I expect or think, could the market rally another 70 points to get to that high, or even less, or just 65 points and get to this high? Yeah, it can. This is my point. It doesn't seem impossible anymore. They get it there, and it expires there. Or they may try to get it up there to put a little bit extra squeeze on it, pulls back, but ends up closing somewhere in here. Make the new high. Finish the minor wave 2. Set the stage for a pretty nasty decline to begin. Minor wave 3 should make minor wave 1 kind of look like kids play. And that's my other point. We still have more upside. And it's just following the Elliott pattern, following the Fibonacci. That's the technical picture. It's difficult to swallow in the current environment that we're being told that inflation continues to be stubbornly high. Interest rates will continue to be raised for the foreseeable future. And that is the message coming from the Fed. So it's not me making it up. It's coming from the Fed. So we have that. But yet, how are we expecting now that the market's going to rally? I couldn't tell you. I don't know what will motivate them. Today, they chose to go on Fed Governor Bostic's statements that he actually made yesterday. Finally, he hits the tape. Algorithms pick it up, starts the ball rolling. Off we went to the races. It doesn't take much. I would think it's going to do that. But understand that it's also getting bigger players out of positions. They're putting it where they want it to expire. This is a cash index. The settlement is not that you get shares of the S&P, you get cash. It's cash settled. Easy, done, clean, pay your fees. Thank you very much. I think we'll get closing above 4,000. Again, I'm going to go to tomorrow. 40.30. We basically, the open interest is starting. You can see 40.40, 40.50. Look where the larger numbers are. As this cooks tomorrow, 4,000 right now is the ticket. During the day, we'll see how it develops. And it should be very, very interesting. A little uptick here in volatility, pretty normal. It may go up higher during the day, but I guarantee you by the end of the day, it'll be back down towards this level. So again, this is where I will be looking, and I'm going to be looking at the volume versus the open interest. Right now, the open interest is kind of telling me 4,000. And what do we have here? 34,000. It's where the open interest is in the put. It's where the open interest is in the call. Then you have 40, 10, 15, 20, 25, 30. Right? Where's our resistance? 30. All right, so I'm going to go back over. What's next up? 1,500 at 40, 50. Where's our resistance? 40, 50, and actually 49. So right there. So our levels are right here. Could they be using Fibonacci? Sure. They could. And it gets programmed in, and that's what gets produced. So for tomorrow, I'd be looking for it to continue to rally, finish this C wave, finish the minor wave 2, which isn't too bad. It's only been in motion since February the 24th, so it's not so bad. It's a week. It's actually a week from that low to wherever this tops out. So a minor wave 2 taking 2 weeks? Yeah, that kind of fits as well. Setting the stage for the next larger decline to begin. And we'll pick it up when and if we get a clear sign that it's stopped and that I can put that C wave up there. Moving averages, you'll notice how they all, and let me just open this up a little bit so we can see it. The 200's going a little bit flat, but that's what I think it could go. Stop there for a minute, then get a quick push above and bring it back down. That's actually what I think can happen. So everything else, now we got it all lining up. The 50 starting to turn. We got the 8 and the 4 above the 50. The 20 is going to likely get above the 50. A lot of this could happen overnight. Can't really say exactly who's going to kick in and who's going to do it. But we're looking for it now. All right. Over in the NASDAQ, it pretty much is the exact same picture. This thing hit it also right on the nose. Support at 11,832, and it hit it, and it stopped, and it tried to test it 1, 2, 3, 4 times. Actually 3, because the first time it hit it, and then it tried to test it 3 other additional times before it finally launched and then started to go up and did not stop. We had 1 hour right there at 11 Eastern, where it declined a little bit, but didn't decline all that much. And everybody thought, well, we're going to go, and it didn't. And then boom, 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 boom. Now, what are our numbers here? Again, A, B, C, B, labeling in. Now, 1.382 is here. What are our common Fibonacci extensions for this C wave? As the B is irregular because it produced an additional low below that wave 1. So we have 1.382 and then 1.618. 1.618 is at 12,062. I'll call it 12,260. Right? So, and we have 0.382, which is for the larger C wave, the minor wave 2, we have 0.382 coming in at 12,255. So being that this is irregular, we're definitely looking for it to get above here, above the A wave, which is 12,191. So 12,200 remains in the picture. First up, 1.382 is at 12,199. We might as well just say 12,200. So I would expect that at least if they're going to get up that high, they're going to go tip above it and try to trigger stops. And they're going to be buy stops. So they get it. They could give it one little final push. They'd be selling all that, and then we're done. So again, even on the internals on both, it fits very cleanly. We have 1, 2, and now we're in the wave 3. 1, 2, 3, little 4. We get a 5, then another 4, and then boom, the final 5. So where this third ends, here, here? Don't know. I think it might kind of get held up at that 200 because, again, EMA and SMA are together, hugging right there, 12,128, 127 to 128. It's up there, finishes the 3, comes back down right into here, and then rallies again to finish the move. Then we will put a C wave up there. This is what I'm looking for, but as long as it kind of finishes it structure-wise, if it ends in a failure, I'm still going to call it. Somehow, I don't think that it will. We saw a lot of activity in NVIDIA. We saw a lot of activity in Microsoft. We even saw some in Google and Apple. And across the board, actually, to a lot of stocks that got beaten down, and then they all came back and they pulled the market higher. So what are we looking for? Maybe Meta 175 to 180, Microsoft 250 to 255. We have 252.5 as a strike, and then 255, and then 257.5. It went up $4 today. What if it goes up 4 tomorrow? You're at 255, right? So NVIDIA 233, it was up 6. Well, what are they looking for? 235 to 240. Well, it was up 6 today. If it goes tomorrow up 6, it's at 240. So these are not impossible numbers. The market can go. The market can do that. And now you're seeing the squeeze is on again. But now we're squeezing the shorts again. Squeezing the longs, got smaller, smaller, smaller. Start squeezing the shorts. We're seeing it happen. So again, what I would look for here is a continuation of the upside to complete the minor wave 2 up here with the C wave. And those are our levels. Now, God forbid something comes out during the night or even early in the morning before we actually physically open. We do have tomorrow, we have a couple of numbers. We got some numbers. Let me tell you what that's going to be. And for Friday, we have the global U.S. services, which is the PMI, purchasing managers. And that's the final for the S&P. And then we have ISM Services at 10 a.m. We might have a decent opening, get it up here. The ISM comes out. They're not going to like it. They pull it back down for the 4. And then we just start rallying because it's expiration. Again, they're not going to need to have much. We saw it today. Negative treasury market. Negative information. Looking at the Fed funds, they continue to push them higher. That's not good for stocks, but we ignored it, and they ignored it. And I would expect the same tomorrow. They're going to hang their hats on Salesforce, Microsoft, whatever they think, and whatever that narrative then joins that. Just remember it's an expiration, and this is what they're going to do. They will get it to the number they choose. Not me, not you, not anybody else. It's what the bigger boys want. Here as well, we have the 200s sitting at 12,128. And then we have a little bit more additional above that, 12,200. Perfect number. Perfect number. And it could run as high as 12,260. My eyes get bigger and I'm like, oh my God, really? And I'm like, yeah, really, really. This was a 40 point turn low to high. Pretty good a negative news type day. Okay, so what do I want to say if something fails? If it fails from up here, let's say we get up a little higher and something should come out and create this downdraft, it will be triggered. There will be a catalyst that's going to drive it. It'll be a catalyst that's going to force the majority to go, we don't care what you think you want it. This news is telling us to sell. And we have seen that in the past where they bring it down, suddenly it stops, and they push all the way back. We've seen both sides right here. Push it all the way down, push it all the way back. All right, we've also seen it on a particular day, excuse me. This was on, I believe it was a CPI number or some particular number, push it down, and before we were done for the day, push it all the way back to where they started. They could push it down on news of some sort and push it all the way back to where they want it. All things are possible. So I don't want to get married to any position right now. I want to keep totally open to do what the market is doing. I personally will try to trade the price action, catch the moves that they're making, being that I'm a day trader and I'm more of a scalper. And for those of you that don't know me, don't judge me on being a day trader. I was an options market maker. I carried big, huge positions for months and built them, traded them, managed them, etc. So now I'm telling you that, yeah, I'm a day trader. And what does a day trader know about the market? A lot, because I've been in the market for 42 years. Now, so options are going to drive our direction, particularly towards the end of the day. Okay, we'll see little fits and starts within it, but by the end of the day, we're going to see where they want it. And again, if you go over and look at the options, not so much in the NASDAQ, you're going to look at some of the components. I would be looking at Microsoft. I'd be looking actually at Tesla and Apple. Look at the bigger participants, the ones that carry the heavier weight in the index. In the S&P, you can go to the ES, and you can look and you can see where those volumes are collecting. Downside, it would have to be something, I don't want to use the word dramatic, but something pretty serious to knock the wind out of the sails and to turn the market definitively negative. And there's plenty to choose from. But if it should, it's going to do how it went up, it'll come shooting back down. And it won't stop. That's kind of what my thought process is. When we're done and it's going to drop into a third wave, the initial kickoff should be like that. Except it won't stop. It'll just keep going. And that's what I'd be looking for, whether it's here, 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 or here. Once it's done and I can count 5, I'm going to look for the start. All right, that's going to be it for today. And have a great expiration tomorrow. Expect we do have those few numbers that will be coming out by 10 o'clock. We have the ISM at 10 o'clock. The employment situation numbers come out next Friday. Reason is that there are 5 Fridays in March. So they're bringing out next week. So that's going to be it for today. And my next update will be on Sunday, March the 5th. Have a great trading day tomorrow.